Good morning, good afternoon. Welcome to Develop Your Edge with Anthony Crudele. I'll be your co-host, Tom Schneider, CMT with NinjaTrader. It is Thursday, February 23rd. And before we get into the good stuff, let's remind everybody that futures and options trading contains substantial risk. Not for every trader. You can potentially lose all or even more than all of your initial investment. That's why we recommend you use risk capital. What is risk capital? It's money you can afford to lose. Doesn't keep you up at night, doesn't extend your retirement horizon. I also want to remind everybody past performance is not necessarily indicative of future results, and what we talk about here today on this program contains neither trade recommendations nor financial advice and should be taken solely for educational purposes. With that out of the way, it's my pleasure to welcome Anthony Crudele to Develop Your Edge. How you doing, Anthony?
Good morning, Tom. Good morning, everybody.
Big day today. It seems like a big day. It's been a pretty exciting week. How's everything in South Florida?
Everything in South Florida is great. I love it when I look at the weather and it's the same low and high with just the sun for like 2 weeks out.
That's great. That's a range. It might be like
It's a
range bound
perfect
trading if we
range.
want. Yeah,
It's
that's
a
that's
perfect
awesome.
range.
That's
Yeah.
great. So good. So yeah, let's get into it. I think it's an interesting topic today.
Yeah. I put a tweet out the other day and I was talking about really, it's not just about strategy, right? Obviously, this is Develop Your Edge. And one of the things I want to talk about on this show is really the difference between intermediate traders and pro traders, even beginner traders to intermediate traders and pro traders. There's always levels that we go through, right? And as a person who's been through these levels and back to these levels and then try to get back up and really what defines them, right? And I think that what defines a pro trader is they're able to really make money almost no matter what the strategy is. So let's just say that you were to go and learn a new strategy tomorrow. If you've been trading for a lot of years and you were able to go and successfully make money with it. I actually went through the transition of really being a very short-term scalper to eventually widening out my time frame and being more of what I would consider an intraday to trend type trader, right? And that's more of where I'm at now. I'm not scalping in and out like I used to. I still do that sometimes, but I changed my strategy and everything. And I was actually getting back to the numbers that I was when I was successful at scalping. I just changed as a person. So I wanted to go and, expand my time frame. So I'm not sitting there clicking all day long. And so I think that one of the things I learned almost even through that transition is what separates that for in my career, am I really to the point where I feel like I can make this for a long period of time is what I would consider a professional trader, someone, no matter what the conditions are, no matter what strategy they're doing, if they want to change time frames or markets, they find a way to do it, right? And to me, that really screamed out that it's not just about strategy. It's not just about the technicals. It's not just about the fundamentals. It's about four things. And like I said, these are, you could find this on my Twitter timeline. I talked about this. What is your mind frame after a loser? How do you handle drawdowns? Are you fully taking advantage of the market when you're winning? Are you putting context into your trade execution? Those were four things that I was faced with when I was really changing my strategy, because obviously the first two, what's your mind frame after a loser and how do you handle drawdowns, was similar, but it was different because did I trust the new strategy? Right. And that's the one thing I think when I look back at it, and I think a lot of the difference between intermediate traders and professional traders is that you build a strategy that you think has high probability and you have this trust within it, right? You say, okay, I like this strategy. I believe in this. But do you believe in it enough to grind through it? Right. I actually was on a podcast the other day with a guy who was an athlete and an ex-athlete. He's a rugby player. They don't really get much tougher than that, Tom. And we were talking kind of about the comparisons between, a rugby trader or rugby player and a trader, and the resilience, right? To be able to make it through, to be able to commit and have the discipline to it, right? The focus of it. Nothing that we were talking about was really was about the strategy, right? I mean, there's always going to be different skill sets. There's going to be some guys that are unbelievable athletes and unbelievable traders. Sometimes that just happens. But for the majority of us that fit in the middle, you're going to have that tenacity. You're going to have to be able to deal with some things that are really not going to be able to be taught on paper. No one's going to be able to teach you these things. These are things you're just going to have to go through. And so for me, those are four things that I have been faced with and continually faced with and challenged with in my career to sustain a level of what I would consider a professional trader.
So you mentioned drawdowns, Anthony. Just for those of you who are new, might have heard the term, don't really understand what it is. It's a little different from, what do you do after losers, right? Because a drawdown is not necessarily a loser. Drawdown is when the market goes against you, you're in a position and it's going the wrong way. So you're drawing down on your account, essentially, is what that is. But it doesn't necessarily mean that you have to get out, that maybe your stops aren't taken. Drawdowns, when you're talking about analyzing strategies, is one thing, but experiencing a drawdown as it's happening is a completely different animal, I think.
Yeah, correct. I mean, in number one, how do you define a drawdown? Technically, any time that we have a losing trade off of our highest point on our account is considered a drawdown, right? What I consider a drawdown is after a full week of trading, am I down on the week from where I started the week? And that's just the start of it, right? I mean, you hope that's all they last. But how do you handle that? I mean, drawdowns are where you're really faced with, is it me? Is it the market environment? Is it my strategy? I've talked about this a lot. And maybe we start with drawdowns because I was going to start with what's your mind frame after a loser, but I think maybe we can start with drawdowns. And so with drawdowns, this question mark is so important because is it me? Is it the market environment? Is it the market I'm trading? Is it my strategy? And I said that really any trader that I feel is at a professional level can trade almost any strategy and make money. Now, mind you, some strategies are going to be better than others. There's no doubt, but they somehow find a way to turn the corner and make money. So the one thing you have to look at as an intermediate trader or as a newer trader is you're building up your strategy, right? As you're working on it and tweaking it and refining it, and you believe in it. You have to step back, and when you are in a drawdown, which is a period of losing of what I consider a week or more, you have to be able to define what that is, because that is where most mistakes come. People become over analytical, right? All of a sudden, you're going into every situation and you're analyzing it way too much. And so you're thinking, do I want to take this one? Do I not want to take this one? You're unsure, right? And uncertainty just continues to bring fear, and just mistakes come, right? So you have to understand that, look at it in as a scenario as this. So I'm a golfer, right? I'm wearing a golf shirt right now, actually. And one of the things that I've noticed is that when you're coming off of, whether it's a bad shot or a bad round or a bad amount of rounds, right? You come in, a lot of times you see that player spend a lot of time over the ball, right? Taking a lot of practice swings. Uncertainty starts stepping in, right? Fear of execution. It's no different than with a trader, right? And the last thing you want to have is that fear. You want to be swinging free with the club. And when you're trading, you want to be executing, with a great rhythm. It's extremely important. So identifying a drawdown comes down to, what is that issue? What is the problem? And each and every week here, we do get pretty technical, and we do touch a little bit of the fundamentals, and we always try to identify what is the current situation in the market, right? And you as a trader, you have to identify when you're in a drawdown, is it the market environment? Is it me? What is it? And I could give you an example right now. Last week was a down week for me. And I am in this current mode of like, okay, what was the issue? For me, the strategy situation itself had no bearing on why I lost money last week, right? The market was not an easy market, at least for myself and my strategy. And the things that I did wrong, the mistakes as to why the drawdown is what it is not a massive one, but it was because I was oversized in wrong situations, right? And so immediately I recognized that. This week I came in, started off small, trying to work my way back a little bit. And it's funny, yesterday I got a little oversized in one position, and that was my only loser of the day. And so it's like this repeated pattern that I make, and I know I'm sure a lot of other people make. And when you get into a drawdown, your mind just starts thinking forward. It's like, okay, I got to either try to make that money back, or you're just off, right? You're just like, oh, I'm just oversizing here. I don't really know why. There's all these different things that happen, right? But you have to identify it and remove it from remove yourself from that situation as fast as possible. So how you handle drawdowns is so key, because most traders, the first mistake that they make isn't that big of a deal. Like last week, I had a losing week, big deal, happens. What I let happen to me this week and the next week is really what is going to start setting the tone, right? It has nothing to do with strategy right now. It has to do with just bad decision-making in certain moments. And I know that. And it's not that I'm even in a bad place or something's going on. It just is like, it just happens. You get in a funk and you've got to find your way out of it quick. So first thing we talk about is, how do you handle yourself getting out of drawdowns?
So, Anthony, when you mentioned you were oversized last week, and the one trade you had this week that was, maybe not going your way, it was oversized. Did you know that when you were placing that trade? So you kind of veered from your usual script and said, I'm gonna do this a little bit larger than I normally do, and it came back, and you recognized that, or did you realize it after? Was it something about that trade after you said, oh, maybe I was oversized there and I shouldn't have been, but I didn't really know it at the time? Can you talk to that?
Yeah, so it definitely was in the moment scenario that I knew I was getting a little big, but I was actually adding to a winner that I had, and I was trying to squeeze it a little bit. And so basically what happened was I started off small with the position, and then I added to it, and then I doubled it again, right? And so I got pretty big. And so then a few ticks against me became just too much to handle, and then I had to puke it, and then it eventually ended up being right anyway. But because I was too big in a wrong spot, like just really trying to squeeze every ounce I could out of a winner, it was just a mistake. Just like even yesterday too, I was going into the Fed minutes. I actually had some event contracts on. I was talking a little bit about this in our chat on Place Your Trades, and I was actually going into it just a little bit short, because the day was setting up, and it was one of the things I talk about here with the anchored VWAP below the 3-minute opening range. And so I actually went into the number just a little bit short some micros, and actually had a great trade. Of course, I'm short a few micros, whatever it is, right? Market breaks, I make some decent money. I also got the event contracts on, right? Everything goes well, I'm up money, right? What do? It bounces, I start to get aggressively short again, rallies all the way up, comes back down. I get out of them. Next thing you know, I'm like, maybe I want to be a little bit long because it keeps holding support now, hitting the VWAP. I'm long. I give back the whole day. It's like, you know what I mean? It's just one of those things you could just get into a bad funk. And I think that, when I look at it, drawdowns psychologically just totally can mess with you, because your mindset is only about catching up. I'm a great front runner, right? When I'm making money, I just pound the table, right? But when all of a sudden I start giving it back, because I'm a competitor, and like most people are, you get pissed off. I mean, it's just the way of the world, right? I mean, that's the way I'm built. I don't like to lose. And so what happens is I end up just getting ahead of myself, and I just end up getting too big, or I start getting too analytical in certain situations, versus going back to exactly what you did, that was working. And so I think of all the things that we talk about, of these things that separate intermediate to pro traders, I think that this is probably one of the most important things, because I still make those mistakes. I just talked about them. I'm open about them. But the difference is I'll get myself right back in the mindset really, really quickly of what made me money. And I think that is really the biggest difference. You don't have to be perfect, but you have to be able to be mentally strong enough to put yourself back to where you were making money quick.
Well, and I think that's similar to any pro athlete who has a bad outing, whatever they're doing, right? The professionals, the real true greats of the games, whatever game it is, they're able to shrug that off and get right back into it, whether it's in baseball, pitching the next inning. A pitcher has a bad inning, you come back, you get rid of it, and you're aces, right? Or if it's a next event, the next game, maybe you had a bad game, come back and you go back to what works, and then you're that great player again. I see that with professional athletes as well, being able to shake off the losers, shake off the bad performances, and just kind of like it never happened, and then get back to where you do know how to perform.
Exactly. It's like standing over a 3-foot putt that you rim out, and next thing you know, you're over a 3-foot putt again, and you're scared to hit the putt. You're scared you're going to push it right, pull it left, not hit it hard enough, right? And the body tightens up. And what's interesting about trading and why it's so difficult is because you're always in the moment, right? So it's like, boom, I make a trade, I could be right back in the next second. Right now, in this world of technology, it's on your mobile phone, it's everywhere you are. So all of a sudden you think you see another opportunity and you could just start spinning out of control. So I think that it takes a really strong mind and strong discipline to getting yourself back to where you were. Like I said, easier said than done. I want to move on and talk about what is your mind frame after a loser, because what this really represented to me when I was writing this tweet and just thinking about this show is revenge trading. Probably one of the things that most traders do, and it is probably one of the hardest habits to break, because it goes back to all these things that we talk about, right? It's not the first mistake, it's the second mistake. This is so common, right? I mean, so many traders you will see just get to the breaking point of like, I'm just done with this. It's almost a cry for help. And I've been there, where you just go, you know what? I don't care right now. I've been long. This thing's working. It keeps getting me out. But the next thing you know, I'm getting back in full size and it goes a little bit your way. And the next thing you know, you're stopped out. That stop was the low and the market makes a high. You know what I mean? And you're just totally, distraught. And, what is your mind frame after a loser? And the thing is, and it's, once again, it's like people say you got to trade without emotion. Well, number one, that's impossible. If you want to be that type of person or try to be that type of person, I think you're in an uphill battle that is just unwinnable. I've talked with many professionals about this, from Denise Shull to Jared Tendler to all sorts of different people, right? It just doesn't work, right? You have to realize that your emotions are a part of trading. And what you have to do is you have to have this acceptance. I did a podcast probably about 8 years ago with Chat with Traders. And I think one of the biggest takeaways that people got from me in that podcast was, I talked about learning how to lose before I could win, because I am the type of person where it's like, I'm a very calm guy, but if you push me, if you do something and I don't get stirred easily, but if all of a sudden you get me to that point, it's kind of like Red Ross from Friends, right? And it's, and you get to this point where you're just, you're just so aggravated that like now you only see red. And I know that most traders have gone through this because the market can make you see red. It's just like, it's the one thing. It could be a massive annoyance and it just happens. So what is your mind frame after a loser? And the thing that I've really had to learn to start to do, and this was many, many years ago, was I just got to get up and walk away. It is amazing what a 1 to 5 minute walk away can do. But most people just don't even have the discipline to get up and walk away. Most people just stay there and just try and take their anger back out on the market. And so that one question is, what is your mind frame after a loser? It goes back to self-awareness. Do I recognize in this moment that I am just super pissed off and I'm going to make a dumbass mistake? And if you can accept that that's probably going to happen, then you need to walk away. And these mind frame is so important because the strategy might keep spitting out along. I mean, look at a trend day. If the market keeps trending down and you keep getting longs because that's all you're getting, because you're not going to get a short because the market keeps hitting support and you just keep buying it, what's going to happen? You're going to get blown up. Those are the days where people just get killed, and you see it. Look at natural gas. Imagine trying to buy that every day for the last few weeks or months. You're just getting destroyed. And then when it finally rallies, you buy into the rally, and then it breaks a little bit and you get stopped out. And, so I think that these things are just there. These things can't be taught. This is all mindset about what separates you from the pack. The top of the pack realizes this isn't my day. This is a bad trade. And they step back in the moment.
And coming back to it depends, right? It's also how long are you going to step away? Like you said, 1 minute to 5 minutes, whatever it is, but it's also deciding when do you participate again, right? And that kind of comes with the reevaluation of what's happening. Like you said, if you keep buying support in a down market, you don't realize that you have all those lower highs, lower lows. You've got this trend going, the bottom's got to be in and it keeps going lower. maybe stepping away, and it could be the next day, right? I think professionals, we talked to Larry Miller, and I'm sorry, Larry Williams. I keep getting those two confused. We talked to Larry Williams, and he said it could be a week, depending on what your time frame is.
Well, yeah, I mean, the other day when I was talking to the podcast, we were talking about an energy trader on Futures Radio, and it's pretty interesting. We were talking about how we think in commodities markets, that using overbought or oversold indicators is just like one of the worst things you could do, because commodities can be overbought or oversold forever. There was days I remember going in when I was on the trading floor, and cattle would be limit up or limit down for weeks, and nobody could get out. And you're like, how's that possible? I mean, I go back to natural gas. Its RSI can be oversold for weeks. You don't know how long. And so those types of tools don't work very well. It's not like the S&P where, it's oversold and, you got a bunch of day trader money in there and it's going to rotate out of it at some point, right? Totally different situation. But I think that, just getting back to today, because I know it's really a lot about the mindset, and we've got two more to cover, and I know we're running short on time and I want to get to them. What is your mind frame after a loser is extremely important. And I want to go to the next two things, because this is where, for me, I feel that really I think for some traders out there that are really calm and in control and can handle the drawdowns and can handle covering, get out of losers, is, are you fully taking advantage of the market when you're winning? And are you putting context in your trade execution, right? And so I feel like this is such an important piece, because they really do work together. And last week, actually, let's pull up the charts a little bit here. Let's talk about some things. Let's get some visual in here. One of the things that I've been talking about lately, and we talked about this last week, is what's happening on the 10-year yield, right? If the 10-year yield is bid and staying up, and this is just the yield, not the 10-year futures, right? This is the 10Y, right? 10YR in Ninja. You have to be able to understand the context of the situation. Last week, we talked about CPI, PPI. We talked about what is happening in the market, right? And what was happening is you have this bullish undertone of what's happening technically, but you have a little bit of hot inflation coming in again. Is the rate's going to stay higher for longer? And you notice how much more talk has come of that over the last several days, Tom, right? That keeps coming back. And so the one thing you have to understand is putting context into your trade execution. Are you someone who knows that a trend is up, but currently there's something else? There's a headwind in front of you. Can you recognize that? So it's about taking profits more on the long side, and even on the short side, recognizing if resistance is hit and it's working, maybe you take full advantage of that position. And it's really comes down to becoming the better executor of your strategy. Now, your strategy isn't going to tell you the condition of the market. Your strategy isn't going to tell you that the Fed might be thinking about 50 to 75 basis points in the next meeting or beyond, right? You don't know that in a technical strategy. So this comes into you putting in that a little bit of extra time, and also reading how the tape is going, right? One of the best things I learned from being on the trading floor was that you actually, you learn how to read how the market's responding to stuff, because of volume, in terms of noise in the pit, and because of volume in terms of total contracts being traded, and what you see with your own eyes and your ears when the market gets loud or when the market gets quiet. And with the S&P to this day, it's helped me a lot, because you can see times where the market feels loud, like it hits an area and all of a sudden it's like, it comes right off it. That reaction tells you something, right? Is your strategy telling you at this point, is the market confirming what your strategy is telling you, right? Is it working really well? Is the market getting loud at a support? Is the market getting quiet at support? You don't want the market to be quiet at any of your levels or your reactions. That means most likely the market does not care about your strategy level or indication, but the market's loud at that point. That is showing that the market cares, right? That's why you have tails. That's why a lot of people use order flow tools and stuff like that, like what's happening in the market. That's why I like VWAPs. Like here we have the 10-year, and I'm just looking at it going, if it's staying bid, it's going to be hard for S&P to rally. It's just the reality of it, right? And so, for me, I think that continuing to put context in the situations and becoming the best executor you can and taking the most out of your situations when things are working is what's going to separate you from that trader that's like right now going, okay, I'm either breaking even, making a little bit, or I'm making some money, but I'm just paying the bills, to where all of a sudden, you're making chunks at a time and you're pulling that money out and you're getting way ahead of the curve and you start falling into that professional full-time trader, because that is truly the difference. Full-time traders don't have to trade and make money every day. Right. And that is something that is very important, because our decision-making is going to be more crisp, because I don't have to come in and do something today. I don't feel compelled to do anything. Those that feel compelled to do something will always force. And so those things today, I think, hopefully we talked about some mindset things that are helping people. I know I want to actually go to the Ask DYE question in a little bit, but if there's anything else you want to talk about with those 4 things I discussed today.
Well, I think, your point about a full-time trader not having to trade every day, that gives that full-time trader more of a flexibility to trade when he thinks or she thinks the market is set up for their better probability to have better trades, right? Not being forced to trade every day. If you were trading every day, you might not see the setups you want. You might, like you say, like if you're a trend trader, you might have a consolidation day and you're just not really going to make anything or be very successful. So I like it in horse racing. Horse racing, the newbies go and they bet every race. A professional picks the races they bet on. They don't bet on every race. They pick the races that their angles work the best. So I look at, and I don't mean to conflate gambling with trading, but it is, making an opinion on an event, and, the professionals do it that way in horse racing as well. So I like that. Those are great points, Anthony. Let's get to the question real quick. If you want to submit a question through Twitter, you can. Just make sure that the hashtag AskDYE is in the question, as well as at NinjaTrader. Usually here at NinjaTrader and with Anthony, we submit tweets that ask you, the viewers, to put in some questions this way. So just make sure you're following NinjaTrader as well. If we pick your question, you're in the 50 states, not just the lower 48, 50 states of the United States, we can get something out to you for using your question. This week, though, we have a repeat questioner. Anissa is back with, how do pro traders choose their battlefield? Are they trend or counter trend traders? Do they emulate the algos? Thanks. So a couple questions from Anissa, but I think that's related.
It is, and once again, it's just really what fits your personality. I stood in front of a guy that was only short in a bull market, and I watched him make millions of dollars. And you say, well, how that's possible? Because he was very picky about when he was short, and he just liked being short. Okay, I was around a lot of guys that were long only guys in the S&P, mostly, even though you could trade both sides in futures and made millions of dollars. Right. And I feel like that question is it's difficult to answer, in the sense that, what fits your style, what fits your personality, in a sense, right? So I am someone who for many years really liked short-term, uber fast getting out for making 50 cents to a buck in the S&P, until the pricing got so high in the S&P that a 50 cents to $1 move, which was just not enough, right? But when the S&P was moving 8 handles a day, that was a feasible strategy, right? And so now I had to move away from that. And I've moved more into trying to trade with the trend than try to counter trend trade. I almost don't even counter trend trade that often anymore, just because I feel like it's well, obviously it's riskier in the sense that you're going against the bigger move. But it's hard for me to put up more winning days when I try to counter trend, right? Because the difference is, when you have trend days that are working on short-term and long-term, which I try to emphasize a lot here with Develop Your Edge, and showing, VWAPs and other tools to do that, to use that for your advantage, that to me is where the real money is made. So, I mean, I think, but that's just the way that I feel. It doesn't mean that it's right. But the one thing I would say is that talking about the algos, is that the algos, the HFTs that everyone wants to talk about, is kind of like the bad guys, right? What they do is they're actually a lot more transparent than people think. If you just sit back and watch and see what they're doing, it goes back to, are you listening to what the market's telling you? there's a great percentage of the trading per day that's being done by the algos, right? So if that's the case, right, and I don't know if it's 80+% probably to where it's done by machines versus people clicking, that means that they're pretty transparent about what they're doing, right? They're not that nimble. They really can't be. And so therefore, if I'm following what they're doing in the sense that is, what are they setting up for the day? And if you can find what's working for them, then to me, I would much rather be with them than against them. Now, you also can have a scenario where they just get out of whack. I mean, a lot of people think that the market is always right in terms of pricing. And I don't really agree to that. And I'm going to tell you why, because there's a lot of times where the algos will take the market to a price that you didn't think you would get. And wow, that's an opportunity. So if you do your homework, they're going to drive price to areas that you think are mispriced. And so once again, they're not that great all the time either, right? But for the most part, if they're doing something that's responding well to what you're doing, that's the trade you want to be on. You don't want to be fighting it. There's nothing worse, right? And I'll use Tesla as an example as a stock, than trying to short Tesla, okay, when the algos in that market are just grinding that puppy higher. You will be grinded into a pulp, right? You're like, oh my God, Tesla's doubled in the last 2 months. And every short has just gotten lambasted. So if you think about it, why would you try and fade that? And I just use that as an example because everybody can go and see that chart and you're like, oh, wow, look at natural gas to the downside. The algos have been coming in, pounding it every day. And every day, the day traders with the weak hands buying it, selling into the break. And so I know it was a long way around to answer that question, but it was a great question, but there's no exact way to answer that.
Well, and I like the way you use the word lambasted. I think that's the first for all of our podcasts, all of our live streams. So thanks for that answer. And I know you have one more thing to talk about.
Yeah, one of the things I want to talk about before I let everybody go is if you go to cmegroup.com or if you just Google CME Group and you learn about micro gold, I see so many people tweeting and talking about gold all the time. I don't see a ton of people talking about micro gold. And micro gold is only $1 a tick and it allows you to take a position in it. And I see a lot of people really talking about what gold is doing. And I think that this product is MGC. Is really good for newer traders to learn how to trade gold. I actually use it a lot more than I use the gold product because I really am not that great at trading gold a lot of the time. So I prefer the less expensive option. And it allows me to scale in and out of it. So go check out micro gold. It's a great product. I think when people think of micros, they're almost only thinking of micro S&P, NASDAQ, Russell, all that. But there is micro gold too.
Awesome. Thanks. And, I'll start using that as well. It's a great intro product, almost like coming off the sim account. You don't jump right into gold. You might start with the micros to just get a feel for actual trading.
Yeah, it's a good product that I think that most traders that are out there, even on the intermediate side to pro side, look at the micro gold because it allows you to withstand a lot of these moves in gold that sometimes can be out of nowhere.
Yeah, for sure. Well, thanks, Anthony. Thanks again. Great show today. I really enjoyed it. Learned a lot. Hope the viewers did too. Where can people find you?
Just find me on Twitter at Anthony Crudele. Quick note, I am not the Porsche NFT SEO. You can see at the top of my Twitter page, my account did get hacked. And I will be back tweeting hopefully in a couple of days. I'm working this out with Twitter as it was a pretty big breach getting into some of my stuff. So I'll be back tweeting in a couple of days.
Yeah, like they say, if you've been hacked on Twitter, you've made it. So good for you, Anthony. And thanks to the viewers. We'll be back this afternoon with bars closing, and then next week we'll do the same time with Anthony. Develop your edge. In the meantime, have a great trading day.
See you, everybody.